The Federal Reserve, America's central bank, plays a big role here. In response to the pandemic, it doubled its treasury holdings, injecting liquidity to help stabilize the economy. But since mid-2022, the Fed has been reducing its balance sheet to fight the inflation that it helped fuel. Other major domestic investors include mutual and pension funds, commercial banks and insurance companies, state and local governments, and even individuals and corporations. Now let's take a look beyond US borders. As of the end of last fiscal year, December 31st, 2024, foreign investors held about $8.5 trillion in US debt, which is nearly 30% of debt held by the public. This is actually down from nearly 50% back in 2011, and the decrease is largely due to Federal Reserve's aggressive pandemic-era bond purchases. But make no mistake here, foreign demand for US debt remains somewhat strong, but it has been on a decline as the trust in the United States declines globally, and of course this is the result of lack of fiscal responsibility and geopolitical shifts in power. Japan and China together hold nearly $1.8 trillion in US debt, or roughly speaking around 6.5% of the total debt held by the public. China's holdings have been declining significantly over the past decade, while Japan's have remained somewhat more stable and consistent. Meanwhile, the United Kingdom and other Western nations have actually stepped up their investments in US debt. Foreign ownership of US debt carries both benefits and risks. On one hand, foreign investors provide capital that can fuel domestic growth, especially in times of crisis. However, the risks actually outweigh the benefits here. On the other hand, more interest payments flow abroad, which means that there is less income that stays within the United States. The more debt there is, the more money is actually transferred to debt holders abroad, in other words. And needless to say, growing reliance on foreign investors may actually reduce US control over its own financial stability.